interesting one, Wilf. They do this 2 times a year, but this time it was done between February 17th and March 27th. So you've got a lot of these high schoolers that are at home trying to figure out how to learn from home during the COVID crisis. When they were asked about the most critical or political or social issue, unaided, they said coronavirus at number 2, though. Environment actually still holding on to the top spot. But then you do have 47% of teens that say they're worried about the economy's deterioration. And that's a significant uptick from about 28% that answered that same question a year ago. So when teens are spending, which has fallen down a lot, they say they're spending about 13% less on an annualized basis. A quarter of their spend goes to food. Chick-fil-A, Starbucks, those are the 2 favorites again for this survey. Apparel spending in general is down about 14% from last year. Footwear spending is down 5%, but the males are still spending more on footwear than this time last year, while the females are spending less. Overall, Nike is the preferred brand of choice for 9.5 years running. In apparel, American Eagle, and Adidas, those come in 2 and 3. Lululemon hits a new survey high for apparel. Vans moderates in that category. Ralph Lauren, Victoria's Secret, those are among the names that are falling out of favor here. And then when you're looking at footwear, Vans is second there, so still popular in that category. Cosmetic spending, Wilf, this is interesting for the females, down about 26%. That is a new survey low. Remember, we've talked about this before, that Visco girl trend that really favors the more natural look. That's part of the reason why you're seeing this category fall so much. Handbag spending, though, too, that's hitting a survey low, just about $89 for the year that the females are spending on handbags.
I do remember that very well, as you would expect. Court, thank you. We're going to drill down now a little further on that survey in terms of teen habits at the moment, what they spend and where they're focusing on. Joining me now, Young King, Piper Sandler and co-entertainment tech analyst. Let's focus, first of all, if we can, on the streaming services. And Netflix is number 1 once again. Talk us through the numbers.
Yeah, absolutely. We asked teens what percentage of their video consumption is spent among a number of platforms, and Netflix finished on top with 33%. That was followed by YouTube at 31% and cable TV at 11%.
Who are the challenges and what's changed in terms of who's second, third, and fourth, for example?
Netflix has historically been either 1 or 2. This last survey we did in the fall, YouTube was actually number 1. However, Netflix came back to retake the lead. Overall, the numbers for the top 3, Netflix, cable, and YouTube, were down from our fall survey. And that's largely because for the first time we asked teens whether they were watching Disney Plus as well as Apple TV Plus. Disney Plus actually finished 5th in our survey with 7%.
I mean, stepping away just from the survey itself and more broadly to what the trends are during this lockdown, clearly some people are losing their jobs or being furloughed. Does that lead to people to cancel some of these subscriptions or cable subscriptions? Or since they're stuck at home, is this the last thing they'll want to cancel at this time?
Well, at this moment, we do believe Netflix is a strong name to own amid these times. With people cutting back on travel, obviously. Netflix seems to be a strong alternative for a lot of these families to do basically during their evenings or even during the day. One of the big strengths of Netflix versus some of the other competitors is the diversity of their portfolio content. They have content for all members of a family, whether it's young children or older adults. So we think that adds a strength that keeps it important to a family to have.
What about subscription packages where live sports has been the centerpiece?
Live sports are still important in general. However, with all the sports leagues suspended at this point,
right. So, are we seeing some of those types of packages being cancelled?
That might be possible. That's not in our data, and that's not what we were looking for specifically. But I can say that cable TV did come down prior to. In this survey, we have it at 11%, and our prior survey in fall of 2019, it was at 12%, and before that, it was at 14%. So we are seeing a trickle-down effect of cable TV in general.
And how are you thinking about the stock price and how to value it for a company like Netflix, which we always know had a sort of unrealistic or a PE multiple that wasn't really the key factor behind its share price on the way up. When we see market turmoil like we've seen of late, does that make a company like Netflix particularly vulnerable, or quite the opposite because of its long-term structural growth factors behind it?
Netflix has actually been strong this year. There were some concerns about it before 2020. However, for 2020 year to date, it's actually been up, even despite all the turmoil in the markets abroad, the broader market in general.
Okay, Jung, thanks so much for joining us.